I'm Chris Preston,
And I'm Brad Simmerman.
and welcome to Street Check, the best podcast in the history of Cabot Wealth Network. Brad, it's America's favorite episode, or at least our producer Madison's favorite episode. It's time for us to be punished for all of our wrong takes over the last, we're going back 6 months now, since the last time we did this. It's our hot sauce punishment episode. If you haven't seen one of these before, we have well, we used to call them mild, medium, and hot sauce here, but it's more like medium, hot, and very hot, I think. And Madison Robertson will join us in a few minutes to dole out the punishments. She'll draw mild, medium, hot from a hat, which I'm sure she's done quite fairly. And anytime she's going to read out all of our takes from the past year. Now, every week we do a defend the take, but it also includes prediction episodes, like we had 6 predictions for 2024, some of which haven't fully played out yet. Some have, or at least they're sort of like an election, or close enough to call. And there'll be some back and forth on what was wrong, what's technically a wrong take and what's not, I'm sure. But ultimately we have enough wrong takes that I have a full 3 full bowls of mini bowls of hot sauce here. Brad, you're a hot sauce aficionado. I assume this is just a normal Friday for you.
Oh yeah, I normally start my day at 7:51 a.m. by eating cooked chicken and hot sauce. That's how I
Cooked
start every
chicken.
morning.
Yeah, you switch it up every time. You go much more wholesome and healthy with your what you're dipping in the hot sauce. I just straight tortilla chips.
I like the chicken because it's high contrast for the camera. If you're
Yep.
listening to this and you want to watch Chris cry live on camera, go to the YouTube channel and watch it there.
Yep. Yeah. Last time almost ruined me. I think I was literally doubled over right after the episode ended, and it took everything out of me not to double over during the episode. I don't know what happened exactly, but maybe
ate
it'll
a
happen
bunch
again,
of
and
hot
that'll be
sauce
good for content. Yeah,
Yeah,
I know what happened. But the time before, I was basically fine. My mouth was hot, but we'll see. Yes, I do recommend watching this one on YouTube. But before we get to that, just wanted to touch on a couple of market, big headline making items from this week. Number one, Fed and Jerome Powell talked this week. They did not did not cut rates as expected. But inflation came in. CPI was a little cooler than expected, 3.3% year over year in May, when 3.4% was expected, 0.2% month over month, less than the 0.3% expected. Market seems to like it. Market was up, new highs, at least entering today. Any big takeaways? I mean, I guess the biggest thing is the Fed seemed to hint that they will cut rates once this year. They didn't say definitively, but I think Powell said the average, what is it on their dot plot or whatever, the average number that Fed members think that rates will be at by year's end is, I think it was 5.1%, and right now it's been between 5.25% and 5.5%. So that would equal, roughly
one
one.
cut. Yeah.
What are your thoughts?
2 big takeaways. As you said, the median projected is up to 5.1, but that's pretty evenly split between an expectation of 1 cut and 2 cuts.
Yeah.
By the Fed. My big takeaway was looking at the summary of economic projections, though. For next year, they're expecting core PCE to actually be higher and to hang in the mid 2s. It definitely feels like the Fed is sort of clearing a pathway towards cuts despite ongoing inflation, which I think is something they've been hitting at when they've been talking about more sensitivity to the labor market and seeing progress on the inflation front. That's the cut you don't want. Like the common talking point is, like, when the Fed cuts rates, you won't want it, because that means that they're responding to negative forces that are underlying in the economy. I think that remains a smart sort of takeaway. We'll see. Um,
Yeah.
they're paving the way for cuts though, but I don't think it's because the economy is so strong that they're free to do so. I think it'll be once we start seeing more evidence of weakness.
Yeah, I wrote about this the other day. So so it's now been 11 months. Well, technically, so last May was the last time that inflation was above CPI was above 4%. It dipped below 4% last June and has been below that ever since, basically in the 3 to 3.7% range since. That was reported last July. So that was the June number when it dipped below 4%. And in those 11 months, the S&P is up 22%, NASDAQ 26%, and the Dow, which is more reflective of what's actually happening in the market, 13%. In the 25 months prior to that, when inflation was above 4%, so it was above 4% for just over 2 years, S&P up 3%, Dow flat, NASDAQ minus 2.5%. So it's pretty clear that sticky inflation, while annoying to Fed members and economists and maybe some voters this election season, does not, market is fine with sticky inflation. High inflation, they don't like. Now, maybe part of that is the Fed has been dangling this carrot of we are going to cut rates since, what did they first say? Like last October, November. If suddenly that, if it gets pushed back and there are no cuts this year, then maybe some more investor worry creeps in. But as long as, CPI is below 4%, or specifically in the 3 to 3.7% range it's been in, I think the market will be fine.
Yeah, I mean, it's not. I think I said last week nobody's running for the exits yet.
Yeah.
But we're seeing the same stuff we were talking about at the beginning of the year, where it's like, the rally's narrow. It's being led by a couple of tech names. We're seeing more of that again. It's not structurally a great rally. I don't love that,
No.
but for the time being, tech is a freight train, and betting against it is guessing when the train is going to stop. Right? It's like, okay,
Yeah.
well, yeah, maybe it stops at 100 feet, maybe it stops in 200, and the difference is, whether you live or die. So
Right.
it's too early to bet against right now. I am definitely the most tech skeptical of the two of us,
Yeah.
but it's going to run. Just let it run. And then when you start to see that those structural deficiencies, when people start getting out of the big tech names, when people start getting out of Apple, Microsoft, Nvidia, that's when, if we run into real difficulty market wide, that's when we're going to start to see it. I would like to, or I'm curious what Dow X tech returns look like. When you were talking about Dow returns, it sort of prompted that thinking,
Yeah.
because I bet the Dow X, the tech companies, is significantly worse performance wise. It's probably like the S&P equal weight, where it's
Yeah.
essentially flat. Unless
Yeah.
you're a big tech monolith, you're not generating returns in this market. I've been advocating for increasing bond exposure, partially because the Fed is going to cut rates. It's either because the economy is so strong that they feel confident they can do so, or it's because there's economic weakness. Either the bull or bear case are both bull cases for bonds. So I'm net long bonds right now. I've been funneling money into the TLT personally. So there are ways to make money in this market that don't involve you having to guess whether the tech rally is over.
Yeah. And to your point, equal weight index in the last year is up just 10%, just over 10%, which is probably
Yeah. Well, I
that.
mean, the Dow was already like a market cap weighted. I don't know. There's so few components. I would have to like break it down by like Dow
Yeah.
X Tech, but no. But thank you for looking at that. But I am curious about it.
Yeah. Speaking of tech and big tech, Apple had a very good week. the new all-time high. I think it leapfrog. We just talked about Nvidia leapfrogging Apple in terms of market cap size. And now I think Apple just leapfrogged Nvidia this week, or at least they had earlier in the week. I know it's down a little today after they got into threw their hat in the ring, the AI ring. You wrote about that this week and how you think Apple might be, and this is sort of the hot take for the episode. You think Apple could be the best AI stock. Explain what you mean by that.
All right. I'm gonna force in a headline I saw this morning. So the G7 summit is going on now. The G7 leaders are going to have an AI presentation, and that seems reasonable. You would think that they would have like leading thinkers in the artificial intelligence space. They're having the Pope make a presentation on AI. People don't understand AI.
Is it a real Pope or an AI version?
No, it's the Pope, the
Okay.
Popa. Most people do not understand artificial intelligence. There's a reason that I am skeptical of the large language model revolution that's coming. It's not coming. But Apple did absolutely the smartest possible thing you can do when you're dealing with a really, really hyped AI environment. They announced that they were integrating AI to make Siri into more of a virtual assistant. It's going to read your emails, it's going to read your text messages, stuff like that. It'll be able to nudge you and help you remember to do things or give you directions or remind you about restaurant appointments, that kind of thing. They announced like you could use AI generated image emojis in your texts. They have a new AI integration into their calculator that got a lot of buzz online where if you change variables, it can update it. But other than that, they're not making huge capex investment. Like they're not funneling money into like building giant data centers that may or may not lead to profitability for them. They have the Apple ecosystem is, I mean, huge smartphone wise, personal computer wise. They know what people are using AI for, and people are using AI for gimmicky stuff like slightly improving emails. That's built into the new Apple platform, right? It'll help you punch up your resume or your email as you're writing it. It'll help punch up text messages, all those things. It'll do the gimmicky image generation. If they need a more expansive call to an AI tool, they're allowing Apple ecosystem participants to basically send their data out to OpenAI and to make the queries there. So instead of committing a ton of capital like all the other big tech names are right now, they're committing essentially no capital. The latest thing that I had seen is that they're basically just paying OpenAI via exposure. So it doesn't seem like it's going to cost them anything to do these OpenAI calls. It's going to give people access to the tools that exist now, not the tools that people are gonna gin up in their minds as something that could potentially be coming in the future. They know how people are using AI now. It's the smartest way for them to position themselves in AI in what is, in my estimation, a growing bubble.
Yeah, and I think all investors really needed to hear was Apple AI. That was music to their ears because the stock went from 193 prior to the announcement to as high as 214. That's an all-time high, at least in a split adjusted basis for Apple. It's down slightly today, 213. Yeah, I think it is a smart approach by Apple. I'm not spending too much on it, but I think all investors want to see it. I was like, oh, do you have AI? Is AI a big part, or at least a part of your sort of, portfolio of offerings? And Apple can now say yes without having to, spend an ungodly amount of their capex on it.
Yeah,
and since they're already eating it up, well, they'll have to see some results eventually. But it's a smart strategy by Apple.
Yeah, two quick takeaways that I wanted to touch on before we punish ourselves.
Yes.
It's what Apple is doing now is the same thing that Toyota did with EVs. Like nobody thinks that Toyota saw EVs as a possibility and thought, "Oh, well, that's not a technology that can ever have any value." They looked at it and they said, "Hey, there's going to be some limitations on how much this can really drive revenue for us. So we're going to take it slow. We're going to focus more on hybrids." And in hindsight, it looks like Toyota made the right call. 2, 3 years from now, I think people are going to have the exact same opinion about Apple. They're going to say, "Oh wow, everybody, even the Pope was hyped about AI, but it turned out to not be nearly as impactful as we thought it would be." Well, it looks like Apple made the right call. The other thing I want to touch on real quick, so Apple, Nvidia, Microsoft are in a three-horse race to be the biggest company in the world. Um, Publicly traded, Saudi Aramco is bigger than all three. At the end of the day, if Nvidia is able to leapfrog one of the other two, there's actually a payday for them. XLK, which is a really heavily traded tech fund, has a weird structure that prohibits the top three holdings from being more than like 50% of the portfolio. So they've got 20% in Apple, 20% in Microsoft, and 5% in Nvidia. If Nvidia leapfrogs one of the other two, XLK has to sell like 11 billion of the other shares to buy Nvidia. So, we talk about these market caps as, I don't know, symbolic victories, but there are actual impacts to the amount of investment funds that are flowing to some of these. So if Nvidia ends up leapfrogging one of those two today, there's going to be another $10 billion worth of shares bought, and the loser is going to get 10 billion worth of their shares sold. Obviously, that's 1% of, or not even 1% of the float. That's a fraction of a percent of their entire market cap, but it's not nothing.
Yeah, no, it's a good note. And that may be the last time we sound smart on the podcast today, because now it is time to bring in Madison Robertson, our producer, who's chomping at the bit. Hello, Madison. For to punish us for all the things we've gotten wrong in the last 6 months. Madison, I assume that you did this fairly as usual.
I think you're muted right
Oh,
now.
you're muted. It's okay. It's okay. We'll get there. Well, you drink hot sauce after that one, actually.
No, that's okay. Thank you. That's okay. That's you guys. Yeah, I divided them fairly, as I always do.
Okay, great. Okay, so we have a list of 15 takes. Alternate between the two of us. Actually, there's one collective one at the end. That Madison will have you read off, and then we'll determine whether they're wrong or right, and then we will be punished accordingly. This is by the way, there's chronological order, basically, for the most part, dating back again to last December. And I think a few of them date back to our predictions for the upcoming year episode. And those may be fodder for this for this upcoming segment. So Madison, you want to kick us off?
I do. Chris, the S&P 500 will be up a double-digit percentage in 2024.
Okay, so we're obviously only halfway through, so there's TBD, but right now I'm looking pretty smart. Up 13+% coming into today. Yeah, I was optimistic about this year. Someone needs to be on this podcast, and so far I've been proven right. Now, we've talked about the rally's been fairly thin, maybe less thin than it was end of last year, or at least maybe not end of last year, but last, say summer, fall. So far, so good. I thought it'd be up double digits. I didn't think we'd repeat the 20+% gain of last year. It's possible that, it'll pull back from the 13% plus, and we won't get the double digits. And when that happens, we have a year-end episode where we'll punish ourselves. So I will be punished if that's the case, but so far, so good.
Is it fair that Chris gets to rate these because he puts one of his correct guesses?
I just went in chronological order.
This feels off. This feels like I need to take this part over. I'm just kidding. That means I'd have to pay attention more. Brad, water will become a trendy trade again.
All right. So part of my rationale
Trendy
with
is a big word.
All right. So part of my rationale with that, I'm gonna bring up what is First Water Trust.
Up 5%, 5.6% year to date. down from 107 month ago, 100 now. You know, like I said, the market is up 13+%. This is up less than half of that. But explain.
So
explain your reason. Yeah.
the rationale is that data center demand for water is going to go through the roof with as much investment and focus on AI as there has been. I don't know. It's up in a flat year for the equal weight, right? So it's certainly, I don't know, outperforming the average stock in the S&P 500 that's not one of the Mag 7. That said, I haven't seen headlines about it. I don't think I can take a win on calling it a trendy trade if I am not seeing Wall Street Journal or Barron's or anybody writing about it.
Yeah, in fairness, the year is only half over, so it's possible the back half will just be waterworks. And I literally wrote about water yesterday. I like water stocks as a long-term play for many reasons. The one you mentioned about, you know, its role in AI is intriguing. Trendy.
Yeah.
I'd say no. I think Brad needs to have a little hot sauce for that one.
There's a little thing. I know which one I want to pick. Just a hot.
All right.
So is that,
start off.
So hot. Okay, so you did put in medium, hot, and very hot. Is that how you did this?
Something like that.
Okay,
All
so
right.
this is a medium-ish. Yeah.
Is it? What's the hottest that you have, Mads?
Hot is the hottest that I have. So this is.
All right.
Oh, that's the hottest. Okay.
Yes.
All right.
There are
start off with a bang.
No milds in here. So you guys can just go ahead and dump this.
Yeah. I was
It's a
excited.
waste of time to write.
Okay, so yeah, you're starting off, so 8:12 a.m. Arizona time. A little Diablo to start your day. Last time. Yeah, remind listeners, this is what, 9 out of 10 heat, basically. Yeah.
I think this is the hottest hot sauce you can buy that's not just basically bear spray. Or is one of.
Yeah.
Okay. It'll be entertaining.
Been this way, Brad?
Get loose.
Have you
always been what?
Dumped hot sauce, like extreme hot sauce on everything that you eat?
Yeah.
Like since you were little.
Yeah, I used to get the suicide when I was like 16. I'd go and get the suicide wings. I would just get the hottest of whatever because it was always a bit. It's a cry for attention.
Yeah.
Okay.
The good thing about starting off with the hottest one is that the podcast is about to get a whole lot looser. Oh.
Yes.
That's what we're here for. Attention.
Yeah.
We want attention.
With that in mind, let's go to the next one.
Chris, the Fed will not cut interest rates in the first quarter.
I was right.
Yeah.
They didn't. Yeah, I had some great takes right off the bat. Don't worry, Madison.
I don't trust it.
There's some backloaded back.
I mean,
the Fed trust it.
The Fed won't cut rates like, oh, the sun's going to come up tomorrow. Yeah, I guess you're right.
This was made in December when the market was excited because why? They thought that rate cuts would start in March. Who was it? Is it Goldman Sachs? It said 6.
It's JP Morgan.
I always get.
You always think it's Goldman Sachs.
I want to dump on Goldman Sachs for some reason, but yeah, JP Morgan. Oh yeah, they were very optimistic about this. They thought 6 cuts. We're still at 0 and nearly halfway through the year. And they said March, and a lot of people were like, hey, maybe it'll happen in March. You and I never thought that. Jacob Mintz, our options trading expert and resident curmudgeon, he also was skeptical. So yeah, I mean, I guess within the Cabot halls, virtual halls, this wasn't that hot a take, but at the time it was sort of 50-50. So I was right.
All right.
So I'm clear.
Nice.
So, yeah.
Okay. Brad, weight loss drug supply constraints will weigh on Eli Lilly or Novo Nordisk.
No, that hasn't happened.
Yeah, Eli Lilly and Novo Nordisk are both up more than 30% this year. Let me pull up the exact returns. But yeah, this is definitely a loss. Eli Lilly is at all-time highs right now. 881. It's up. Sorry, I shortchanged it. 51% this year. Novo Nordisk is hovering near all-time highs, up 37%. this year. So I'd say, yeah, I don't think those supply constraints are.
No, I don't really have a defense for this one.
Yeah. Okay. So punish.
I'm just
Punish.
seeing a pattern. All of Chris's are right and Brad's are not. I just feel like that's
That is a
problem.
pattern.
That happens for a
Not the
reason.
nefarious one that you think.
Oh, good. Hot times 2, which means
Oh, is that
you have
that's a
to
thing now?
do. That's a new thing now, which means you
Oh.
have to do 2 hots, 2 of your most hots.
Wow.
I accidentally wrote that instead of mild, so my bad.
Yep. They are pretty similar.
It was better. Listen, this is kind of Brad's fault. Like, we were talking about the hot sauce challenge about a week or 2 ago, and I was like, oh man, it's going to be hard to come up with something else. And he's like, yeah, it's kind of run its course. Like, there isn't really any tricks that you can pull now.
Yeah. I don't even know
And
why
that
I
just made me
bothered to
come
fill
up
the
with a bunch
mild.
more.
I don't even know why I
What?
bothered to fill up with the mild
Sorry.
bowl. Wow. So that's three Diablo hits for Brad. How you feeling?
Fine.
Okay. That's not good content.
Doesn't face him.
Yeah.
No, I'm feeling a little bit loose.
Okay.
Okay.
All
Okay.
right.
Good for Friday. Chris, Chinese stocks will double US stock performance in 2024.
Year's not over, but I think we can say this isn't going to happen. S&P up 13+%. Let me pull up Shanghai Stock Exchange. Or wait,
Hang Seng.
Hang Seng. Maybe that'll help me more.
Year to date, Hang Seng up 7%. So half. You were right, but just in the wrong direction.
Yeah. So I'm,
So wrong.
so yeah, similar to your water pick. Year's not over, but I think we can call it. I'm wrong.
Just one hot.
Just
One
single
hot.
hot.
Okay. All right. Let's get some Diablo in here and just see how it goes.
All right. Chris is drinking. I don't have the list. Or Chris is eating. I don't have the list. So we're just going to kill time, Mads. Took my daughter to her first concert.
Oh. Which one?
Mother in Cave Town.
I don't
know. Have you heard of either of those groups?
Oh, that was 2 people.
Yeah, I thought it was one.
Nope.
And Meet Me at the Altar was the opener. Have you heard of any of those?
I've not heard of any of those.
All right. Worth a
Was
shot.
it one of you two who had to look up? Chris, was that you? When I said that Post Malone came out with a new song. Oh, that was Tyler. Tyler said, "Who are they?" And I was like, "What?"
Yeah. Wait, was
Post
that
Malone is
that
one
on the
person.
podcast? Or was that on?
No,
Okay.
no, that was
Too bad.
But I do think I have written proof of him having to Google search Post Malone. You guys know who Post Malone is, right?
Yeah.
Yeah.
Brad kind of looks like Post Malone.
Just
minus
need
the
a couple more tattoos. Yeah.
Yeah. Okay.
Right.
Now we're off and running.
Brad, there will be twice as many IPOs in 2024 as 2023.
I think I got off to a hot start on that one. Chris, do you have IPOs year to date by any chance?
I think your last count was 81. I think you pegged it as it would be 300.
Yeah, I had to land on a round number. I do think the IPO market has picked up meaningfully. I know Tyler's written about it a couple of times. And I think if you just look at like market cap, like the market cap of the IPO companies, that is actually pretty close to a double relative to this time last year. But I think I said it at the time, put a number to it so we can make it a determination. But
wait, hang on. You're right. The AI, you never look at the AI version. Okay. There were 371 IPOs. Wait, could this be right? This is globally. I can't remember. Were you doing global?
no, US IPOs year to date.
Well, I think either way, I don't think we're gonna. What was your take that it would
double what 2023 was? And I don't know, like with your China one or my water one, yeah, maybe it ends up doing so, but I don't think it's going to pan out.
Yeah,
it's not panned out.
83 so far. US IPOs this year. Yeah.
So it's probably running like 30% higher than 2023.
All
All
right.
right, Mads.
3 for 3 for Brad.
Oh, bring on hot times 2.
All right.
Wow.
I'm gonna have to reload my hot sauce.
So I just brought the whole bottle.
Wow. So that's
Oh,
5.
never.
Oh, you did. Yeah, you may have to get a refill there.
All right.
It's no fun if you're not hurting at any
Like
point.
it's nothing.
Five dips of the.
No, it's mildly uncomfortable.
It's supposed to be more than mildly uncomfortable.
We'll get there.
Okay, we'll get there. All right, we'll let Brad recover to the degree that he needs to. And what's up next?
Chris, the Magnificent Seven term will disappear by year's end.
I think we could say this one's wrong. It's not year's end, but Magnificent Seven is as prominent as ever. You know, we just talked about Nvidia and Apple at all-time highs, and trading turns being the second or third most valuable company in public company in the world. Microsoft still trucking along. Netflix doing fine. Or no, Netflix is not a Mag 7 technically, is it? Tesla's the one outlier that's still not having a good year. But overall, Mag 7 market is up 13%. Magnificent 7 is a big reason for that. So I'm wrong.
Yeah, actually, I'm not going to step on Mads. But
you can defend me while I'm eating. Sorry.
Yeah, that's sort of what I was thinking.
Hot times 2.
Hot times 2. Seem to be a lot of those, huh?
There's only 2 of them, actually.
Yeah, but there's only one of the other ones, so.
Right.
Yeah, so while Chris is doing that, I will say that there has been more discussion over whether Mag 7 are even really leading the market, or if it's more along the lines of like Final Four or like the Elite Three or something like that. So we're seeing even narrowness within the Mag 7, Tesla notably. What's Google? I don't know what Google's year-to-date returns are, so I'm going to look that up and I'm going to talk while I do that. Like I said, loose podcast today. Year-to-date, Google up 30%, so still contributing nicely. Amazon year-to-date up 22%. So it's not like they're being left behind, but that focus is really narrowing down to the top 3.
Yeah. But I mean, you know, without any portion of the Mag 7, it would still, market would not be performing the way that it is. And that term is very, very much still very prominent. So I've taken my.
Do you need some milk?
I didn't bring any milk. I thought about it, but I didn't. I wanted to, you know, I knew Brad wouldn't. So
He would make fun of you if you had milk because you're not 12.
Yes.
Seltzer water and
seltzer water. Oof.
Regular water.
That's regular water?
Liquid Death. I got them. They were selling
these. They don't have running water in Arizona, do they?
No, they were selling these at the concert when I took my daughter, and I thought she would get a kick out of having concert waters at home. So.
Well, you went last night?
That's so sweet.
Last Friday.
Oh, okay.
It was a 20-hour day for me. Woke up at like 5:30 a.m. for work, and then was out up till 1 a.m. So.
Wow. I don't think I've seen that late unless, you know, woke up in the middle of the night or something. Okay. Next.
All right. Brad, beer stocks will be down this year.
I think you're right on this one. Yeah.
I am right on this one.
Yeah.
So
yeah.
my thinking behind this was that there are growing cultural trends away from alcohol consumption, especially for younger people. And with the increase in the amount of like legal marijuana out there, that has sort of usurped Alcohol, I think more people now use marijuana on a daily basis than alcohol. Boston beer down 16%.
Yep. That's Sam Adams.
Um,
Anheuser-Busch Bud down 8%. Been really trending down of late. You were right. Take this as your first victory lap. Yeah, and I like the premise that, what hard seltzer.
no,
Sorry.
not even hard seltzer, just that alcohol consumption is trending down. It's not,
Yeah,
it seems
cannabis,
to
I
have,
guess. Yeah.
yeah, cannabis and the rise of mocktails and like a decline in drinking culture in younger populations. I mean, they're more health focused. So,
Yeah.
all right, I'm going to take the win on that one.
Yeah. And cannabis stocks, no, I'm not setting the world on fire this year. They're up 7%. MJ is up 7% this year. So going in the other direction. So, yeah, good premise. And you're right.
All right, Chris, the S&P 500 will weaken and the equal weight index will strengthen. You made that on February 9th.
Yeah, that's wrong. Equal weight is still sort of floundering. Let's see what the S&P has done exactly since February 9th.
So while you look that up, that was a really good take until like mid-March or end of March or mid-April, because we were seeing a broadening rally. We were seeing it move out from the Mag 7 to the other 493 stocks in the S&P. And then investors, I don't know, maybe let the hype get the most of them or get the best of them. Why take generally flat returns in an equal weight S&P when you could be in tech stocks that are up 20 or 30%?
Yep. So S&P up from 5,000 to above 5,400 since I made that take. So that's like 8-9%.
10%.
And S&P equal weight 64.44 to 65.93.
So under 3%.
Up, but yeah. So wrong. I like I still like the premise. I still think, I could be right eventually, but I'm not right now.
You got a hot. And before Brad gets in crap, I actually did 2 of each. There's 2 mediums, 2 hots, and 2 hot times 2. But you just got a regular hot.
So we've gotten 0. There actually are mediums in this.
There actually are 2 mediums in there.
Okay.
I don't believe you.
I will show you at the end.
Okay.
I didn't want the mediums to surface.
Yeah. If you're scoring at home, that's 4 hots for me and 5 for Brad so far. So we're off and running.
Yeah, and further one further note on Chris's take. We may not have seen it yet, but it is kind of what we need to see at some point.
Yeah.
We need small caps to start catching up. We need mid caps to start catching up. We need the other S&P 500 companies to start catching up to really have a solid, sustained rally. And we're rallying without it, but that feels like a game of chicken to me.
Yeah. I mean, as I said pointed out with Tyler when he was on here about a month ago, small caps, the Russell 2000 and the equal weight index, large cap index have been pretty much in lockstep for neither a budge much for 2.5 years. And that's been, similar the last few months. Okay. What's next?
Next, Brad, AI is now in a bubble. I said that on February 2nd.
So I'm going to be of 2 minds with this, or take sort of 2 directions. AI is in a bubble. I still believe AI is a bubble. I still believe that the promises that marketers are selling and that businesses are promising won't pan out the way that they believe. The bubble's not popped. We are in an inflating bubble. So I guess the deciding factor on whether that is right or not is whether or not the bubble has popped. Because it has not, I will take that as a wrong.
There's no timeline on a bubble per se. I mean, okay, so I'm looking at the Wisdom Tree Artificial Intelligence and Innovation Fund, WTAI. And so when did he say this? February 2nd. Okay, so WTAI was at $20 then, it's at $20 now. That's pretty bubble-ish. I'm willing to give you some slack on this, especially since we're only, what, 4 months removed from it, 4.5. I think you're okay. I think you didn't say the bubble will pop in the next 3 to 4 months.
Yeah, but so that feels like a cop out to me because that would be like me saying, "Oh, hey, utilities are in a bubble and then they're up 2% in the next 6 months." Right? It's like, "Oh, it's going higher. It's getting bigger." I think I have to take the loss on this.
Okay, fine. If you want to do, I just let the record
For the
show I did
sake
not force you.
for the sake of integrity of the game, I have to take a loss on this. The only way that you can tell something is a bubble is once it has popped. So based on that sort of rule of thumb, I am taking a loss on this.
Okay.
Hot.
There are no mediums in there.
Okay.
I don't
No,
think so. I didn't want to
let's
step on her bit.
There's
Okay.
one.
That was on her desk next to the bowl she's drawing.
Yeah, she forgot to
Okay.
put them in the hat. All right.
All right.
Okay.
All right.
Where's the other one?
All right. I just dumped out like a
Where's that?
tablespoon or two of the hot on my plate. I just went through it all. So I'm actually now reloading the plate.
Your face looks a little red now, I would say. Hard to tell with the beard.
All right.
What was the thing you got wrong? Right.
AI bubble.
Yeah. I mean, you're being a little harsh on yourself, but you know, it's for the purposes of entertainment. So
Just call them balls and strikes.
Yeah. Okay. Next up.
On February 23rd, Chris, you said the markets have reached a short-term top. No new highs until Q2.
This was very specific in the time.
What
stamp
day
on
was
this one.
that?
February
That was
23rd.
on-
I think I was
Mm-mm.
wrong. I'm almost
You were
positive I was wrong.
2 months early.
I think February 23rd, for like a week there, I was looking good. It hit a new high by March. So wrong. That's
I'm here
pretty-
seeing something. I'm just pulling it off.
If
of
Chris
my
gets a medium
desk.
for this one,
A hot times
Hot
two.
times two. Oh, great.
I don't know
So
how to. Is
we'll
this
be
what
even.
people do?
Oh, that
That's
actually
why they
works a lot
do
better.
that.
Yeah, that is actually a lot better. Hot
I
times
always
two.
made fun of. We talked about this. I make fun of like the little makeup influencers on social media that are like, "This is my brand of lipstick that I use," you know, but it actually has purpose. They're onto something.
Brad and I will be even after this. 6 apiece.
really?
I'm catching up quick.
All right. Well,
Yeah.
hopefully we're not wrong on all of these.
Well, remember, 2 of them were times 2. We haven't gotten 6 wrong. We've had to do.
Yeah, that's fair.
Yeah, we each gotten 4 wrong, I believe. So.
All right,
All right,
Mads.
Brad. Google will launch a dividend before year's end.
Yeah, they did. I don't. So the thesis at the time was, it's good optics. They were like very visibly and continue to be facing antitrust suits. Somebody else initiated one, I think. Well, I know Nvidia did, but it's like really nominal.
Yeah.
But it's good optics. They're sitting on a ton of cash. It's a way to show that you still have faith in your ability to grow. They're contending with people like me saying that, you know, the tech stocks are overvalued, and it essentially cost them nothing, and they did it.
Good take. Yeah, 80 cents annual dividend, 0.4% yield. So it's 0.45% yield. So it's modest, but it is a dividend. So you're right.
You guys should get like
Okay,
a
and
treat for
I'm-
getting one right.
What's that?
You should get a treat for having one right, getting one right. Get
You're
your
looking
favorite
at it.
candy or something.
Grapefruit seltzer.
No, we should have an alternative. We should. Well, that's where we.
Positive reinforcement.
I don't want to eat anything right now, though. My mouth is hot, right? Like just me
Bro.
eating more stuff just makes it worse.
Oh,
Yeah,
ice
I wonder,
cream.
candy in the mix really might upset some things.
Some ice cream would help, though, since you're too
I'm
grown
taking my
up to
kids to get
drink
ice
milk.
cream. I'm taking my kids to get ice cream in literally an hour for their last day of school. So that'll be well.
Was that
that's
your
well-
call? Because you knew about your morning? Was that your
100%.
decision?
Yeah, 100% my call.
And because you're in Vermont, it's probably like you go to the farm and stare the cow in the eye while you're eating the ice cream that was made from cream that was made that morning. Is that how it works?
That's
You keep eye
incredible.
contact, maintain eye contact the whole time. No, there's something here called creamies, which is no one knows outside of Vermont, but like Vermonters say, like, oh yeah, creamies. Like no one knows what that is. It's basically soft serve ice cream. They're delicious.
That's the best.
And I'm struggling. So what's the next one?
Chris, the Fed will only cut rates twice and it won't hurt the market.
I'm not wrong yet. It's still could be. We just said at the top of the episode, it's between 1 and 2 right now. 2 could be right. You can't take having hot sauce.
No, I
And
don't know.
It affected the market. The fact that it went from as many as 6 or 3, people thought, to now it certainly won't be more than 2. That has not affected the market.
And yeah, I think that's enough to push me into the give you credit for being right. Like, because my instinct is it's too early to call it.
Yeah.
But given stock performance since that call, yeah, we'll give it to you.
Yeah, and I mean, all it takes is, say they do cut in September, as a lot of people still expect. They cut in either November or December. There's your 2. I still think it'll be 2. I'm doubling down on that. Maybe that'll be my take. If I'm wrong at the end of the year, and it's 1, I can just know that I've doubled down, and it'll be 2. I'll be punished twice over, maybe 4 times over if Madison has anything to do with it.
You won't know until we start recording.
Yeah.
All right,
Mads.
Brad. On April 5th, the market correction has begun. Look to 5,000 in S&P for support.
I think you were right.
How low did we get to on the S&P after?
Slightly below it, but very briefly. It did correct. What was the date on that again, Madison?
April 5th.
April 5th. So it's a pretty good call.
It was trading at 52.04. That was the high until May 14th, and it dropped as low as
49.67.
49.67. Yeah, that feels like a
correction
on that.
I mean, the S&P was down what, 6% or so?
Yeah, and then the NASDAQ was down more than that, and I think some of the leading growth stocks were down like 10%.
Yeah, you basically called that it was going to be a bad April. This was a week after it had topped and had been going up, had gone up for 5 straight months. You called that it was going to be a bad April very early in the bad April. So I think this is a good call.
Yeah, I think I can take a win on that. I mean, even at the end of the month, the NASDAQ, so from April 5th to the end of the month, the NASDAQ had dipped 4.3%. I don't know. I think I'll take the win on this one. It hit support about where I was eyeing, tested a little bit below it.
Where are you on a scale of 1 to 10 in terms of pain right now? It's been a few minutes since you had your last one.
Like a 3.
Okay.
What about you, Chris?
Maybe like a 6. I just had 2, mind you. But as we've cited, Brad's from Arizona. I'm from Vermont.
Yeah, that's the
cows and creamies are more my specialty.
White bread is like a 2 out of 10 on the spicy scale in Vermont.
Right. No one eats white bread. All right.
Well, it's good we're doing this then, Chris, so you can, toughen up your spice stuff. Yeah. All right, last one. This is both of you. Netflix won our Magnificent Madness bracket in March.
I mean, this was we both. So here's what the Magnificent Madness bracket was. I put this last because we were both wrong. We chose from among the 7 magnificent. We did 8 stock bracket. The Magnificent 7 plus Netflix, the one non-Mag 7 stock, and we both chose Netflix. I think it was the 8 seed. To be the best performing stock this year. It's done fine. It is not NVIDIA. It is not
What
Apple.
date was that?
I think that was like March 17th. I think I wrote it down.
15th, then maybe.
Could be.
So Netflix is up 11% since the 15th of March.
Okay.
Apple is going to be up way more than that. Let's see.
That's the point.
23%.
Nvidia.
Since the 15th of March, Nvidia is
Close to a double.
48% higher.
Oh, is that it? Okay. Okay.
Now it's
still,
up 50%.
Yep.
So it's like,
yeah, this is wrong. I don't think any amount of, shy of like a AI totally collapsing back half of the year. Possible if your bubble take finally comes to fruition. And Netflix just keeps motoring higher. But I think we can call this one. I think we're both wrong. And I think we need to finish the episode by having one last punishment together.
I hand selected this one for fun. Hot times 2.
Yeah, I'm glad you really put those mediums to work. I have 2 chips
Yeah.
left, so I'm glad that this worked out perfectly.
I haven't touched
See?
anything but hot, which I've had to refill. So
Yeah, I mean my other 2 bowls are so sad looking, unloved. It's great podcasting, both of us chewing.
yeah, we should have taken turns on that one.
Yeah, probably. All right. Let's stay on air for a few minutes, or at least a couple minutes. Well, so we can get the full effect here.
Are you gonna start crying, Chris? That's why I come to these.
I'm good. No, I'm good for now.
Bummer.
For the record, yes, I live in Vermont, but I like hot things. Now, do I usually have Last Dab Diablo sauce on anything? No, I've used it strictly for this.
Yeah.
I think I was after one of the episodes, we didn't finish any of the bowls that I had filled up, and they were on the counter, and my kids were sort of hovering near them. I was like, do not touch that one. Not that they would have, voluntarily eaten hot sauce, but I did not want an emergency room trip.
Yeah, I've never used Diablo for anything other than this podcast, and I don't know if you can tell, but we're about a third of the bottle down.
That was just from today?
No, that's from since we got it, I think last year sometime.
I think I'm like half. I think I pour too much. At least the past, there's just the right amount today, but in the past ones I poured too much.
And this other,
so excited.
My mild one I eat regularly. The medium one, I don't even use for anything. Like I'll add it to chili sometimes, but that's about it. And it's sitting untouched on my plate. Next time, I'm just going to bring instead of having to wash an extra plate, I'm just going to bring the hot sauce, the hottest one up, and I'll just pour that straight on chicken or whatever it is that I've got.
Pour it straight in your mouth, I think, next time. I think what we should do. This, are we toughening up? Well, you're already fine, Brad, but I think this is the most we've consumed with Madison's little, trickery there with the times 2. And yeah. I don't feel great. I feel better than after the last one, that's for sure.
You guys look too okay.
I have not stood up yet though, so I think that was part of the problem.
I haven't been tracking it. I think I must be at like 8 by now, right?
We're both at 8.
I lost.
Maybe I was 7. We both had quite a bit, but
you guys are both doing too okay though, which is the problem. So I need to work on my end of this.
Well, it's not you, Mads. We're at the ceiling. There's nothing else we can do with this. There's nothing you can do that makes this hotter. It just extends how long it's hot.
Mm.
Yeah.
Like, could we get like a Carolina Reaper or something and eat that on the podcast? Yes, we could. Am I advocating that Chris and I both do that the next time we're both wrong about something? Yes, I am.
Is that hotter than? I'm not familiar. You're the hot sauce expert.
Yeah. The Carolina Reaper is the second hottest pepper in the world. only because somebody like genetically engineered a hotter one this year.
Okay. Yeah, I mean, let me just get my workman's comp in place before we do that.
Just
But
have 9-1
on
and
here.
then just hit 1 when you're going down.
Okay. Yeah. But I just need to make sure it'll be on, make sure it's on the company dime.
All right,
Um,
what are you up to now after the last two bagger for discomfort?
Weirdly, not that much change. I probably went from what did I say, a 6 before? I'm maybe like a 6.5,
I
7, maybe 7.
Yeah, I'm feeling like I don't know, somewhere in that 4 to 6 range after those last two.
Oh, that's
I'll,
something for you.
I'll be an
Um,
8 in about an hour when my stomach hurts
I
because I've
think,
had nothing but cold chicken, hot sauce, and different kinds of water.
yeah, I think the stand
Concert
up
water.
after the episode last time was really what changed things for me. So we'll see. We'll see here. Was that the end of like Kill Bill when she does like what I'm talking about? Where she does like the heart what is it, the palm
Spoiler
heart thing?
alerts. Spoiler alerts for Kill Bill, yes. But yes, that's at
The
the
guy
end.
stands up, I won't say who, stands up and within
5
you take
steps and
5
then
steps you die. This could be similar. But I'm not going to do it on air. I think Madison, we just need to get more wrong next time. We actually had some rights sprinkled in there, which were a nice reprieve.
I also have a plan for next
Okay.
time.
Yes.
I
what,
almost
hot
use it
times
today, but
3?
no,
Hot shots and you
that
just
would
shot
be,
glass.
Oh
I
God.
mean, that's a good idea.
The volume is too much. Like that'll really bother your stomach without it doesn't meaningfully make it hotter. It just gives you an upset stomach too. I'm on board if we do straight in the mouth. If we do from the bottle to the mouth, I'll sign off on that. Chris can override me, but I'll sign off on it.
All for the purpose of content. I'll sign off on it.
Wow,
But
keep
hey,
that
I
in
gotta
mind
go get
too.
some ice cream with my kids, and definitely, it's doing it strictly for my kids. Um, Madison, thank you for doing this. Although I don't think you need to be thanked on this
No,
one.
thank you.
Yeah.
Thank you for doing this.
And we will make some more bold and probably wrong. I think we're about 50-50, right or wrong. Seems
It's
like.
I mean, the problem is the boldness, right? Like it's not fun if I come out and say, TLT will be up 3% in the next 2 months. It's like, yeah, probably. But
Yeah.
like that's not a fun take. You have to take a big swing. So when you take big swings, you miss a lot.
Yeah, we did have some other takes in there that either weren't as fun or weren't really measurable. So I only did the cream of the crop here, which was most of them. But okay, so we'll see you next week. Sans hot sauce. Madison, thank you for joining us, and thank you for joining Street Check.